Farmers rev up planting, but will rain spoil the season again in the Northwest? Soybeans hit $15 only to falter. What are the odds for a squeeze? Wheat prices continue to fall. Where's the bottom in this market? Hi, I'm Bryce Knorr from Farm Futures with answers to those questions and more on this week's edition of The Buzz. A slow start to planting in May gave way to rapid progress in recent weeks. Farmers planted 88% of their corn by Memorial Day, in line with the 5-year average. Beans went in fast, with 59% of the crop in, 3% more than normal. The slow spot remains the upper Midwest. Farmers in Michigan always plant later than most, but this year only 53% of their fields were done with corn, almost 30% behind normal. Other states from North Dakota to Wisconsin were behind as well, not only for corn. Soybean planting in the north was slow, and spring wheat even more behind. USDA reported only 59% of the wheat planted in the key state of North Dakota, with only 26% emerged. With rains returning later this week to the northwest, finishing up corn and spring wheat may be a challenge. That could increase soybean acres, which hit the soybean to corn ratio and help firm the July-November soybean spread as well. Corn traders, however, appeared unfazed, with futures reversing higher, trying to find bottom again. Seasonal trends suggest it's time for a low, but rallies now depend on hot, dry weather. There's some heat in the forecast, but with rain predicted too, the combination is bearish for now. Soybean prices remain on a roller coaster, a ride that was down around Memorial Day. July futures finally got some traction, reversing higher on Wednesday, thanks in part to a big move in Chinese soybean prices. Demand from the world's largest importer appears to be picking up, though don't look for any new old crop sales. There are just not enough old crop soybeans left for that. Instead, the U.S. is importing supplies from South America to keep from running out of inventory this summer. The fireworks could continue into July delivery, but charts are showing some warning signs. July filled but couldn't hold the big gap on the nearby chart from last summer, and the failure to hold gains above $15 left a triple top on the daily chart as well. Still, the July contract remains in an uptrend, off March-May lows, holding well above its 50-day moving average. Don't expect this story to end soon or quietly. While beans remain explosive, wheat appears ready to end the 2013 crop marketing year this week with a whimper. After a nice rally into early May, futures fell apart. Chicago and Minneapolis July are more than $1 off highs, while market leader Kansas City lost $1.25. There were a few reports of better than expected early results in Texas, but nobody really expects this year's hard red winter wheat crop to amount to much. Despite rains last week, conditions overall were just stable, while yield potential continues to decline in Kansas. Still, as I've noted before, it's hard for wheat to rally past the May USDA report, even in bullish years. Not only does harvest begin to weigh on prices, but there's no indication of short crops in major growing regions around the world. Good rains are falling from Western Europe into Ukraine and Russia, all the way to Kazakhstan and Siberia. Temperatures will hit 100 degrees in parts of China's winter wheat belt, but production there is pretty far along. El Nino remains a concern in Australia, but most of the southern part of the continent picked up rain over the past week to help early growth get off to a good start. Perhaps the most telling note in wheat is that the CBOT could restore variable storage rates in its contracts due to increasing carry. That could make storage hedges pay off for growers who can store grain into early winter. Otherwise, rallies depend on somebody else having some serious weather trouble too. Well, that's all for this week. Estimates for USDA's June crop report begin hitting the market soon. I'll have farm futures projections on the next edition of The Buzz.
We'll have to have more margin now, there isn't any doubt. So you better dash with a load of cash or we'll have to sell you